having trouble getting approved for a merchant account? Has your ability to accept credit cards been taken away? Well, not to worry. Your business might just be classified as high risk. Let's clarify what high risk business is. In the eyes of the payment processor, businesses are considered high risk if they have an increased chance of financial exposure linked to their industry. Because financial institutions aim to reduce their liability, they often deny services to high-risk merchants, leaving them without the ability to process payments. And without that, well, let's just say it's pretty difficult to run a profitable business nowadays without accepting credit card payments. There are a few factors that may cause your business to be labeled as high risk. Let me give you some examples. Highly regulated industries such as adult, CBD, and firearms can pose compliance, reputational, and monetary risk to financial institutions. Business types with future delivery, such as ticket sales, travel, and subscriptions, are considered high risk because of their increased likelihood of chargebacks. And finally, your creditworthiness. Banks rely on your credit history to give them a snapshot of your financial integrity. This helps to ensure that they won't be held liable for your financial difficulties. While you may not be able to avoid being labeled high risk, you can protect your business from financial risk by opening a high-risk merchant account. Being a high-risk business isn't necessarily a bad thing. It just means that you need to take proactive steps to make sure your payment operations run smoothly. High-risk merchant accounts are specialized to handle the increased financial liability that may come in the form of chargebacks and fraud. And this is how they do it. You'll have access to higher chargeback thresholds, meaning that if your business type is more prone to chargebacks, you'll have a higher limit for them, reducing the risk of your account being shut down. High-risk merchant accounts often come with advanced account security and fraud detection tools to help mitigate chargebacks. Because even with higher thresholds, you still don't want to get dinged for additional chargeback fees. And extra protection against fraud is always a good thing for both you and your customers. Some high-risk businesses are heavily regulated, and high-risk merchant account providers understand the unique challenges of these industries. By utilizing industry-specific resources, you can ensure that your account is in line with all necessary regulations. Plus, you'll have a dedicated account manager who will provide you with personalized, one-on-one support. High-risk merchant accounts are basically traditional merchant accounts, just with the ability to meet the challenges of high-risk businesses. But in meeting those challenges, there are some differences between the two types of accounts. Let's go through them. To make up for the increased financial risk, high-risk merchant accounts often incur higher fees and longer settlement periods for funding. A reserve agreement is commonly added to a high-risk merchant account to safeguard processing banks against potential liabilities. With reserves, a percentage of your sales are held in a separate account to cover any possible losses that your business might experience due to chargebacks and fraud. If all goes well, those funds will be released back to you in about 3 to 6 months. High-risk merchant accounts are also reviewed more closely by the underwriting team during the application process, leading to longer approval times and more documentation requirements. This may include additional background checks, credit checks, or verification of business information and history. And while these standards may seem like a lot, they're a necessary part of having a high-risk merchant account. Otherwise, you risk being shut down, hindering your ability to process payments. And you probably want to process payments so you can get paid for your goods and services. So let's go over how to get a high-risk merchant account. First, you'll fill out a pre-qualification form that requests your business and personal information. Next, you'll be contacted by a representative to talk about your specific business needs. After that, you'll complete the application and submit it along with all the required documents. Finally, your information is sent to the underwriting team at the acquiring bank where they review your application. Now, you'll either be approved or declined. If you're approved, you may also be required to sign a reserve agreement stating that a portion of your funds will be held to cover any losses on your account. So if your business is high risk, it's not a big deal. Reach out to see how we can help you get started with a high-risk merchant account. Don't forget to like, share, and subscribe for more content just like this. And until next time, happy processing. So if your business is one more time. So if your business big snake. So if your business is high business
Yeah.